Gene Munster joins us, co-founder of Deepwater Asset Management. Gene, I've got like 8 ways to go. Let's start at 60,000 feet. I'm in the theme that if it ain't broke, don't fix it. The Magnificent Seven had a magnificent 2023. I just don't buy the idea it ends. Will it continue into this year and next?
For the year, I think it absolutely will. And what we're seeing is a gravitational pull when it comes to the AI opportunity with the Magnificent Seven, and also what I would call the Ordained 15, which are the private late-stage AI companies. And I think that's where all the traction is going to happen. I would say there's a Mag 7 on the public side. There's also going to be this Magnificent 7 or 10 on the private side. But yes, Tom, I think it's going to continue. I would caution and continue for the year. I would caution this earnings period is going to be a lot of intensity, a lot of focus from investors related to commentary about AI contribution in 2024. I think that is the A topic that's going to orbit around the Mag 7 for this earnings period. And I suspect that the commentary is going to be relatively muted, or the commentary will be, we expect some contribution. The good news, so I think that could cause a near-term pause in some of these stocks. I think the good news for a lot of these, for the companies, if you look at the estimates for the December quarter for the growth rates, and then for the full year of 2024, December 23 and 2024, analysts aren't really expecting much contribution from AI. I think psychologically, it's a bigger topic than it is relative to the numbers. But I think that these companies are going to continue to do well. I do anticipate this earnings period to be mixed in terms of the stock reactions.
Early Gene Munster, Munster's so large. There's early Gene Munster, middle Gene Munster, and later Gene Munster. Early Gene Munster was 14 pages from Piper Jaffray, which came in at 4 p.m., and you had to read it by dinner, or you couldn't focus. And in the back of it, he always had these brilliant sum of the parts analysis. Gene Munster, for the Magnificent Seven, for Apple and Microsoft in particular, what's the sum of the parts look like right now?
Well, the sum of the parts, it's ultimately, when you think about Apple, it's about services, it's about, you put all this together, I think it's better than a $3 trillion company. I think the iPhone business, today it's just over half of their total revenue. I think in aggregate that should be, it should trade at essentially a 35 multiple. I think that multiple is justified given, even though it doesn't grow much, I think it's justified because these devices have become substance to our life. We can't live without these, basically half the people in the US can't live without these devices. And so I think that you put this together, I think this is a $3+ trillion company. I think that there's a lot of uncertainty related to Apple at this time. I haven't recalled a time in Apple's history when there's been as much concern going into this to a quarter. There's concern about the iPhone demand. There's concern about some of the delays that they've had, or taking some of the watch off the table because of the blood oxygen monitoring. And there's also some concerns related to how their App Store policies are changing, specifically related to steering and the impact on the App Store revenue. But I think that you know, when you course these out, I think that this is a $3+ trillion company. And when it comes to Microsoft, from a sum of the parts, there's two basic parts to it. There's their cloud business. That business today, they have 22% market share. Microsoft in total is a $220 billion revenue company. It's going to grow about 15% this year. But as you think about an aggregate, their cloud business is worth, even though it's call it 15% of total revenue, given the profitability, it's 30+% of the valuation. The biggest lever when it comes to Microsoft over the next year in terms of the sum of the parts is related to what's going on with the upside and uptake with Microsoft, their Copilot and Office, that contribution. So they, of course, have raised the price, going from $15 to $30 a month, and that started back in November. There's about 350 million Office users. So the Office business today is about a $65 billion business of that 220 total in revenue. But you could build a case if a third of those people pay up for Copilot, which I think is conservative, you know, that can increase revenue by 10%. And that's probably the biggest sum of the parts lever when it comes to Microsoft, is what the uptake is going to be. They haven't broken out what those numbers have been. As I mentioned, it started in November. All they've said is that they've had a positive reception from their early corporate beta testers with this Copilot. And I suspect this is going to be a hit product. It's going to help you compose emails, help you do PowerPoints.
Do my taxes.
Yeah, exactly.
Yeah, do taxes potentially. So I
you
think
thought that was funny, Lisa.
Yeah.
You want to jump in here? What would you use Copilot for, Lisa Mateo?
Let's see. I know what my kids would use it for.
Book reports.
That's a
They would
threat.
help with the homework.
Book reports. Of course, we're talking to Gene Munster, managing partner and co-founder, Deepwater Asset Management. Hey, Gene, I think, that in 2023, not just in tech, but for the whole stock market, AI was such a driver of positive sentiment. And I think what a lot of investors who are pulling away and just saying, all right, let me just take a look at this AI story. And the question I hear most often is, how much of this spending across tech over the next several years for AI will be actually incremental to what was already kind of a base case for tech spending in general? Do you have an idea how that might look?
So yes, the answer is that it's a substantial amount in the 20 to 30% range.
Wow.
Meta last week had some commentary about what their spend is going to be on GPUs. And if you look at what their baseline spend was before they announced that, it's a 30% increase in spend. Is these, there was this talk about pause in AI last summer. There was this letter that went around that a bunch of people, including ironically Elon Musk, signed. And there's been no pause. Is that these companies continue to aggressively go after this, and I think that is one of the clearest signs how much investment is going on from these companies, that the AI substance is ultimately going to exceed the hype. It may take several years to get there, but yes, the infrastructure spend is remarkable, especially with the Magnificent Seven, and of course, that infrastructure spend helps a lot of companies, many companies, potentially most companies, to enable AI in their products in the years to come.
Hey, Gene, one of the things that I think some investors are waiting for when they think about AI is that defining IPO. Like maybe Google was a defining IPO for the search business. Facebook was the defining IPO for the social media business. And you mentioned some private companies. Do you see something like that in the next year or two? A company or a group of companies that say, wow, AI has really arrived as a standalone kind of investment opportunity?
Absolutely. I think that's going to be the next leading class. I think it's probably 2 to 3 years away, but I think that these companies that are AI first companies, when we look at the Magnificent Seven, I talked about the upside related to Copilot and Microsoft and saying that could add 10% to their revenue. Well, these companies that are AI pure plays, they're growing at 300% off small bases, but approaching more than $1 billion in revenue, some of them. And I think that these AI pure plays, there will be this moment. Ultimately, when you put it together at Deepwater, we think we are going to enter an AI bubble in the next 3 to 5 years. We don't think we're anything close to it right now. We put this in, we think we're in like 1995, and we still have 5 more years to go before this really escalates. But I think that's going to be one of those moments where it really gets some excitement in the market once we get some of these IPOs. And who are they? It could be OpenAI, Databricks is one, Hugging Face, those are Midjourney. Those are kind of the 4 most obvious ones that would be public.
That's a secret world of Gene Munster there. Gene, the fact of the matter is, Mr. Nadella is firing on all cylinders. You mentioned Copilot and all the applications that we're seeing of actual money coming in, $20 a person, $10, $30 a person. And I'm enjoying a 38 multiple, and maybe my Munster guesstimate forward squeezes down to a 35 multiple. What do you do with a tech stock when all the good news is in, like in Microsoft right now?
Well, if your view is that all the good news is in, you probably sell it. And I think in the case of owning, that is a great way to build wealth, is to have people agree with you later. And if you there's generally a consensus that the good times are going to continue for these large companies. And so I think that if you have a view that maybe this is as good as it gets, that this is absolutely the time to sell, because you'll get multiple compression. I, of course, don't believe that that's the case. And I just want to put a little bit of perspective on that in terms of, how on earth I really strive to be level-headed when it comes to these tech trends and making sure that I'm not getting carried away and some of the overall hype on it. And when I think of AI, I'm in the camp that electricity is 100, the mobile phone's a 25 in terms of scale of importance. The internet's a 50, and I think AI is probably a 90. I think this is ultimately
really that big. Wow.
And if in fact that ends up playing out, then we really haven't seen. I'll give you another example. Is that we were buying Meta over the last couple of years, and it's done well recently. And we debated internally about is this a stock that we should sell? It's had a good run. Let's take our money and go other places. But then we just thought more about the impact that AI is going to have in their business, and it just felt like this is one to continue to hold. And so that's what we're doing.
Single most important insight of the week. You just heard it from Keene at Munster with war wounds of selling too soon. And he said he has a winner in Facebook. Guess what? He and his team said, extend that. And that, Paul, you and I know, how much money have I left on the table? I'm in triple leveraged all cash. I'm leveraged up with a 15% gross, and I go, now lighten up. And I'm wrong every time.
Hey, Keene, one of the, I'm just trying to think of some headwinds here for the tech space. I mean, do I have to worry about Washington, D.C. here in terms of regulations more just broadly defined on tech and maybe even specific for AI? How are you guys framing that risk out?
Well, when it comes to AI, there's going to be more regulation. Of course, we've got that letter that I mentioned. Tim Cook has been, he hasn't said anything in his prepared commentary on their earnings calls in 2023 related to AI. He has made comments more recently outside of the earnings calls and said that regulation is important. He's mentioned that also in their Q&A. I think when you have a company like Apple inviting regulation in, I think it's probably something that is going to play out. As far as the impact on the business and how profound this growth can be, I don't think it's going to have an impact on that. I think that a lot of the regulation is going to come around things like watermarking related to images to try to help prevent deep fakes, and the use of AI for whether it's for malice behavior. But I don't think that I think that this aggressive investment cycle is ultimately going to continue. The broader topic beyond AI and regulation in Washington is something that has orbited obviously for years, and we have at the end of this month Meta and Snapchat and TikTok they're all going to be on Capitol Hill and talk about some of the latest issues related to some of the targeting that's going on those platforms. The simple answer is that regulation sounds bad, and really the substance of it hasn't played out. And it's a little bit hard for me to imagine why now is the time when this would start to have an impact.
Really generous time with us today. Keene Munster, thank you so much. Deepwater Asset Management there on your view of tech.